There is a tax deduction that the heirs quietly expanded this year, and most Americans over 65 who are filing taxes have never claimed the full amount they are legally entitled to. It is completely free to claim. It takes about 15 minutes to check. And for the people who actually use it, it results in real money-back money that the heirs has already approved for your age group specifically. I have seen people recover $247, $380, even $412 or more every single year just by filling out one additional line correctly. Before we get into exactly how, subscribe right now and hit the bell. The IRS updates these deduction rules constantly. When they change, the IRS does not send you a personal explanation. Subscribers find out in time. The ones who are not find out after the filing deadline, after the refund window has closed, after the money is already gone. Stay with me until the end. The deduction is called the Enhanced Standard Deduction for Seniors, and it is built directly into the IRS tax code under Internal Revenue Code Section 63F. It lives on IRS.gov. It is free to access, and if you have never looked at your Form 1040 specifically for this line, it takes about 15 minutes to verify whether you have been claiming the correct amount or leaving money behind. Here is why this deduction has the potential to change what you owe or what you get back by hundreds of dollars every year. I want to explain this clearly because it is the part most people do not understand. Every American taxpayer gets a standard deduction. For 2024, that base amount is $14,600 for a single filer. But here is what almost nobody tells seniors directly. If you are 65 or older, the IRS adds an additional amount on top of that base figure automatically, but only if your return is filed correctly. For the 2024 tax year, that additional amount is $1,950 for a single filer and $1,550 per person for married filers, meaning a married couple who are both 65 or older can claim an extra $3,100 on top of the base deduction. That is not a small number. That is a number that directly reduces your taxable income, which means it directly reduces what you owe or directly increases your refund. According to the IRS, a single senior filer who misses or underclaims this additional deduction loses approximately $1,950 in deduction value. At a 12% tax bracket, which is where a significant number of retired seniors fall, that $9,950 translates to roughly $234 in actual tax dollars. That is $234 that either stays in your pocket or comes back to you as a refund. Over a 20-year retirement, that figure reaches $4,680, and that is a conservative estimate. For seniors in higher brackets, the number grows larger. For a married couple, both over 65, underclaiming that $3,100 additional deduction at the same 12% rate is $372 per year. Over 20 years, that is $7,440 in tax savings that was available all along sitting right there in the tax code, approved by Congress, waiting to be claimed. And here is the part that makes it worse. The IRS released updated guidance in 2025 as part of its inflation adjustment cycle, and the additional deduction amounts increased again. Because these adjustments happen annually, the loss does not stay the same. It compounds. Every year you file without verifying these updated figures, you are using a stale number. The gap between what you claimed and what you were entitled to grows quietly year after year, and the IRS will not flag it for you. There is also a secondary layer most people miss entirely. If you are legally blind, or if your spouse is the IRS, allows an additional deduction amount stacked on top of the senior deduction. That means some households are leaving two separate additional deduction amounts unclaimed at the same time, and they have no idea because no one walked them through the structure. The IRS does not find these errors for you. There is no automatic review, no alert, no letter. The data goes into your return, the tax liability gets calculated. And unless you specifically verify your deduction total against the current year's IRS figures, those underclaimed amounts sit there silently, filing after filing, year after year. Tax software can autofill based on the information you entered, but if you entered your age incorrectly, checked the wrong box, or used last year's numbers, the software accepts it without question. The IRS accepts it without question. The system was never designed to protect you from this. It was designed to process what you submit. Who is most likely to be affected by this? Seniors who use tax software without reviewing the senior-specific lines. Tax programs like TurboTax or H&R Block can auto-populate your return based on inputs. But if you rush through the age and filing status sections, or if you used last year's return as a template, the software may have carried forward an outdated deduction figure. 2 minutes of verification can reveal a $234 to $372 discrepancy. Widows and widowers who recently changed filing status in the year following a spouse's death. Filing status often shifts from married filing jointly to single or qualifying surviving spouse. This transition almost always changes the additional deduction amount you qualify for, and many people file the first post-loss return using the same process they always used without realizing the numbers have shifted in both directions. Seniors who were self-employed or ran small businesses in the 1980s and 1990s, irregular income years during that era sometimes created incomplete or inaccurate heirs records, which affect your reported income and indirectly affect how deductions are applied on certain forms. Verifying your filing details annually is especially important if your income history is not a clean straight line. Married couples where only one spouse has reached 65, this is one of the most commonly misclaimed situations. When one spouse is 64 and the other is 67, the additional deduction only applies to the qualifying spouse's portion. Many couples either claim the full joint senior deduction too early or miss the partial deduction they are already entitled to. Both errors cost money. Seniors who rely on a family member or informal preparer, when a son, daughter, or neighbor helps file your taxes, they are often working quickly and may not be aware of every heir's inflation adjustment. The person helping you is not a CPA. They are doing their best with the information they have. But their best may not include checking IRS Revenue Procedure 2024-61 to confirm this year's exact additional deduction figures. Veterans and retirees receiving pension income alongside Social Security, this group often has more complex returns with multiple income streams, and the interaction between pension income, Social Security taxation thresholds, and the standard deduction can easily result in a miscalculation that goes unnoticed for years. Here is a real example of what this looks like. A woman who worked as a school cafeteria supervisor in the late 1980s and early 1990s retired at 66 and began filing her own taxes using the same software she had used for years. She was single, over 65, and each year she clicked through the same screens in the same order. After sitting down with a volunteer tax preparer through the IRS Vita program, it was discovered that her software had been applying the base standard deduction, not the enhanced senior deduction, because a box indicating her date of birth had not been properly confirmed during a software update 2 years earlier. After correcting that single field and filing an amended return, her refund changed by $247 every single year for the rest of her filing life. She had been filing taxes for 40 years. She had no idea that $247 was sitting there unclaimed, not because she was careless, but because the system never told her to look. A volunteer, not the IRS, not her software company, sat down with her and caught it in under 20 minutes. So, here is exactly what to do. Step 1, go to the official IRS website, navigate to irs.gov, and search Standard Deduction 2024 or Standard Deduction 2025, depending on which tax year you are currently filing. You are looking for the official IRS table that shows the additional amounts for seniors 65 and older. Do not use a third-party website for this number, get it directly from irs.gov. Step 2, locate line 12 on your Form 1040. This is where your standard deduction is reported. Below line 12, there is a checkbox section that asks whether you or your spouse are 65 or older, and whether either of you is legally blind. Confirm that the correct boxes are checked for your actual situation this filing year. Step 3, compare your claim deduction to the current IRS table. Take the number on line 12 of your filed or draft return and compare it directly to the IRS table you pulled in Step 1. If those numbers do not match, if your return shows a lower figure than what the IRS table says you qualify for, you have found the discrepancy. Step 4, if something does not match, do not panic. If you are preparing your current return, simply correct the entry before filing. If you already filed and the error is in a prior year return, you can file an amended return using Form 1040X. The IRS generally allows amendments going back 3 years from the original filing date, which means errors from 2022-2023. And 2024 may all still be correctable right now. Step 5. File Form 1040X to claim what you missed. Download Form 1040X directly from irs.gov. In column A, enter the amounts as originally reported. In column C, enter the corrected amounts. In Part 3, write a brief explanation correcting standard deduction amount for taxpayer age 65 or older per IRC Section 63FF. Mail it to the IRS address listed in the 1040X instructions for your state, or file it electronically if your tax software supports e-filing of amendments. Step 6. Confirm receipt and track your amendment. The IRS has a tool called Where's My Amended Return, available at irs.gov. After submitting your 1040X, use this tool to track processing status. Amendments typically take 8 to 12 weeks to process. Insider tip, here is something most people do not know. If you need a copy of a prior year tax return to complete your amendment and you no longer have it, the IRS will provide a transcript going back 6 years for free. Request it using Form 4506T at irs.gov. Even if you do not have your old paperwork, that option is fully available to you and it costs nothing. Most people spend more time comparing prices on a $40 purchase than they have ever spent reviewing the one line on their tax return that determines how much of their own money they keep for the rest of their filing life. And every month that passes without checking, the gap does not close on its own, it stays exactly where it is, quietly costing you. If the error is in a prior year return, the 3-year amendment window is counting. It does not wait. This is worth 15 minutes. Go to irs.gov, pull the current standard deduction table, check line 12 on your 1040, verify those boxes are checked correctly. And if something does not match, download Form 1040X and correct it. That is the whole thing. 15 minutes. One form. Potentially $247, $380 or more back in your pocket, permanently corrected, for every year you continue to file. Subscribe, share this with someone you know who is 65 or older and filing taxes. The 15 minutes they spend today could change every single return for the rest of their life.